Mr. Amit Gupta of Fintrekk Capital to get his views on the markets. And sir, I want to begin by asking about this tweet that you put out a couple of days back, which indicated that regulatory actions we have seen over the past few months from RBI and Sebi, that has helped bring down leverage in the system. And according to you, that could probably give good opportunity for investors to invest in good stocks at decent valuations. So I mean, just to clarify, are you expecting a big fall before the eventual resurgence? And if so, what sectors will fall the least and perhaps gain the most in this shakeout?
Yeah, hi Suyash, good morning. Thank you for having me. The financial market regulators, whether it is RBI or Sebi, they have been repeatedly cautioning investors and intermediaries in the past few months. However, regulators' cautions were mostly unheeded as because both investors and intermediaries were continuing to ignore fundamentals. There were more of a momentum and leverage trades which were happening, especially in the IPO and the SME space. And a lot of regulatory and financial limits were getting exceeded. So consequently, the regulators have started to take action, especially in the last 1 month. I expect that to reduce the leverage in the system, they'll continue to take precautions and take steps, and that would create a waterfall kind of a fall in the markets, and we may be able to get stocks at much better valuations than what they were till last week. It's always difficult to point a percentage of fall when it can happen, but since we are a bottom up investors, we are actually looking at stock specific opportunities. If they come into our comfortable buying valuation zones, we are happy to take the action, but as of now we are on the sidelines for the past 10 days or so.
All right. And as you rightly pointed out, sir, there are problems that are brewing in the SME segment, and SEBI particularly is suspicious of market manipulation. I mean, the stocks over there are plummeting. Yesterday they crashed by 16 to 20%, the constituent stocks in the BSE SME IPO index. The index on the whole was down 5% or so. This morning it's down 1.5% and falling. For those investors that are heavily invested in this segment, how can they screen their portfolio for market manipulation?
So in the SME segment, the disclosures are very less. So sometimes it's very difficult to know just by reading the balance sheet, how much of a issue is there or how much you can trust the numbers. So you can always scuttlebutt and try and find out what are the ground realities, how much orders they are actually getting, how much margins they are actually making. But since at the regulatory level itself, the disclosures are not much, the only thing which you can do is a little bit of scuttlebutt research to understand a company. In my experience of 2 decades, almost I would say 90% of the companies you will filter out with very simple screeners to weed out these kind of stocks. Usually the 10% which remains eventually move to the main board, and that is a good indication to actually invest in these kind of SME stocks at the right time and at the right valuations. But the kind of euphoria which we have seen in the past 6 months or so in this space, it was actually quite surprising to me that SEBI took that long a time to actually get down heavily on the SME stocks, even though it's just a verbal job owning at this point of time. But I believe there will be much more stricter IPO norms coming for SME stocks in the future.
All right, and even though as we speak the markets, they are in a correctionary phase right now, but one sector particularly stands out, and that is the FMCG pack. It's up this morning, up around 1.5%, whereas every other sector is now in the red. The sector clearly has been under pressure for the longest of time, and I think the inflation situation with in India stabilizing. I think that bodes well for some of these FMCG stocks for their margins. Also, puts more discretionary income in their hands. Amit, I'll come to you first. Amit Ranjan.
Yeah, thank you, Suyash. The food inflation numbers, which account for nearly half of the consumer price basket and therefore FMCGs, came up at 8.6% yesterday, slightly higher than 8.3% in January, which is just right for the market and therefore the positive reaction. The downside is that the persistence of the El Nino conditions and therefore an expected weak rainfall and a scattered sort of rainfall, and that would impact the crop. And why I say that? Because rural consumption in the FMCG sector accounts for 60% of the revenues of FMCGs, and that has been floundering. If we look at the stocks, Hindustan Levers has been the worst affected according to this, and because of this, the average household purchases have also gone down. Whether you look at cooking oil, that has been down, washing powder is down, basmati rice is down, salt is down, therefore Tata Consumers. So most of these stocks, if you see Hindustan Levers, ITC, last 1 week returns, or even Hindustan Levers, even the last 6 months returns are in the negative. But most of the other stocks, Tata Consumers, they are all in the negative as far as the last 1 week and 1 month returns are concerned. Sir, do you see a turnaround in this sector despite what we are expecting with the rainfall and the El Nino conditions that are persisting?
So I think the El Nino conditions will weaken in the next 3 months. That's what the meteorologists' predictions have been. Our ground research, talking to people, in the villages and those who actually grow crop, the Rabi crop is not that much impacted. Having said that, I think the volume growth in the FMCG companies will be a little difficult to come by. HUL has also already said that they are expecting about 2% growth in the company. So even though one can say that the worst is probably priced in, or the worst is probably done with, and with the El Nino conditions sort of receding in the next 3 months, we should have a better rainfall, and hopefully by the monsoon there will be better crop, and rural conditions can improve from there on.
So, looking at the stocks, do you see the companies which are less on the whose product mix is less towards the food side, like maybe like P&G and Colgate Palmolive? Those are the stocks that will perform better as they are even in the times to come.
No, it's a little difficult. I mean, Colgate is also a rural product. People there have also shifted towards, towards the actual toothpaste rather than just doing it with the other means. So the volume growth across FMCG pack, whether it is Colgate, HUL, even I would say premium products like Britannia, etc. They're facing a lot of issues in the volume growth. And if by for any reason the cost of the raw materials go up because of any inflationary pressure, then that volume growth will also sort of decline, even further. It could be even negative volume growth. So I'm not too keen at this point of time on these stocks and on these companies. I believe there will be better opportunities once we get closer toward the monsoon season and RBI rate cuts timing.
All right, and I mean, stocks like HUL, like even though they have not given returns to investors, they are pretty much holding the fort. They protect the capital. I mean, and this is specifically relevant in a time when we are seeing big cracks in the market appear in the broader market, especially. So I mean, just an observation, not a recommendation, of course. But there are two big events lined up for Friday, Amit. We'll have MF stress test result, and also the electoral bond details will be put out by the Election Commission. I mean, what will you be eyeing in those reports, and how will it be relevant for investors, and what should they be looking out for?
See, as far as the mutual funds stress results are, concerned, the stress test report, so that will, give out our estimate, how much is the volatility in the small cap indexes, small cap, not just small cap, even the large cap and the mid caps. So you'll have a better understanding, of how much time will it take for portfolios to get liquidated, because you don't want a case where there is a mass redemption, and then mutual funds are not able to do it in a particular period of time. So I think parameters like investor concentration, portfolio turnovers, these kind of things will come out. I don't see it to be a too bigger deal, because this notice has come from last 1 month or so. AMFI came out with a notice sometime last week in February. So a lot of selling would have already happened because of that, wherever the stress test was required. And especially in the small cap space, we have seen the index is down about 10-11%. And I don't see too many surprises on that front. Instead, this will actually make the markets better, because illiquid stocks will be sort of reduced in leverage and reduced in concentration within the mutual fund portfolio. So I think that should not be a major concern until unless we get a real surprise. As far as this election bond is concerned, your guess is as good as my guess. The results are already submitted. The number of donors and the name of donors may also come up by Friday 15th by 5 p.m. Uh, and we have to see what names comes up and into that, because all these are anonymous political parties donations, which are done by purchasing the electoral bonds from the SBI. So we have to see, which names comes up, and then only we can react to it. We cannot really plan for this event.
All right, those are the words coming in from Mr. Amit Gupta. Sir, great insights from you as always. Appreciate your time and your thoughts. Thank you for joining us here on Newsline.
Thank you, Suyash, for having me.